We have Sachin Shah actually joining us. Let's take the discussion forward. Sachin, this was an issue. I don't want a reaction on like a populist move ahead of the elections, but actually this is a inflation calming move as well, isn't it?
Yes, hi Ajay. Thank you for having me on the show. So you're right, absolutely. This is, I'm sure this kind of announcements will keep on coming as we enter the election season, right? And finally, all due credit to the government. If you think about it, for last so many years now, for the last at least 5, 6, 7 years, I think I completely agree with what I just heard the oil minister talking about. The balance sheets and the financials of the oil marketing companies per se have actually strengthened very much over the last 6, 7 years. Gone are the days where they had to really bleed a lot when the oil prices went through the roof. I mean, we are almost 90, 95% completely linked to the international prices, and that's how we all pay for our fuel bills day in and day out. So I think there will be always some bit of tinkering here and there which they have to do, which the government has to take actions keeping a larger picture in the in the overall scheme of things. So I'm not overly perturbed with this, but I think at least some bit of this kind of announcements we will all have to be expecting. And I think overall, if it's doing good for the larger community, it helps in terms of the overall consumption also. It helps in overall purchasing power also. Like as you rightly said, it definitely helps in holding on to the inflation numbers.
Sachin, how are you assessing the risk reward in this kind of a market? One section of the market is only getting much more nervous given the sharp rally in small cap, mid caps. Others are waiting for a correction, but there's no major, really big major worry at the horizon yet. How do you stand on that argument?
Well, yes, Ajay. So clearly, the valuations aren't cheap for sure, right? They are somewhere. Our sense is that at this point in time, they are somewhere in the maybe fully priced to maybe maybe little, maybe not little less fully priced, but they are definitely not very cheap for sure. I mean, there are a lot of businesses, a lot of stock prices which have actually delivered fantastic returns, and they are now discounting at least, I would say, March 25 kind of positive earnings estimates also at this point in time, right? Now, of course, it's also going to be a function of how the companies deliver the results over the next 2, 3, 4 quarters. If they deliver the way today the stock prices are discounting them, then I think we are fine. But there is some bit of optimism now that is getting built into the overall sentiment in terms of the overall stock prices. So we are definitely a bit cautious for sure.
Where are you booking profits? Your fund also has been doing very well, I would say. Are there some areas where you are trimming the positions and maybe raising a bit of cash or looking for some more attractive areas of the market?
Well, Ajay, so like as you mentioned earlier, that the small caps have actually done very, very well in the last 3 to 4 months, I would say. And that is one area where there are a few bottom up businesses where we've had opportunities. Some of the businesses that we've been holding on, say, a power equipment company that we've been holding for the last 5, 6 years. And in the last 18 months, it's actually gone almost, I would say, 8 to 9x. So clearly, we have found opportunities to book profits over there. And so it's very, very company specific where we like where we like the businesses, but the stock prices have run up a little bit ahead of time. And the fact of the life is, Ajay, that equity markets, always gives you opportunities on both the sides, right? Either it's too depressed or it starts getting into that fully priced, a bit kind of an exuberance kind of a zone. And long-term investors like us actually would like to capitalize on those opportunities. So this is probably the time where, at least in some of the stock prices, we are getting some opportunities to book profits, and we are happy to book profits at this point in time.
Sachin, how are you looking at the hospitality space? Hotel stocks, be it EIH, be it Indian hotels or smaller ones, the chalet, all of them are rallying hard today on the back of massive wealth creation in the last 2 years. New triggers, perhaps the wanderlust, the festive season, cricket season, all of them coming together. Do you think bulk of the positiveness is already in the price in there? Or if you are holding, would you like to hold it or even buy newer names or stay away?
Sure. So, Ajay, actually, we own a business which is part of the hospitality business, but the business model is much different than the typical conventional hotel business. So, we've been owning this company called Mahindra Holidays for almost now, I would say, more than 8, 9 years. So we believe that those kind of business, because finally in the hotels business, majority of them are very, very highly cyclical businesses, very high capital employed intensive businesses, and obviously they will go through this cycle. So like today, what you're seeing a very upswing in terms of a lot of these hotel stock prices is also a function of the kind of the depressed valuations, depressed stock prices that you've seen probably about 5, 6 years back. Of course, today the ARRs of all the hotel rooms are very very strong, and I think there's always a demand supply mismatch which happens over a period of time, and then of course after 2 3 years again we'll see supply coming back. So these are cyclical businesses. So I would only say that investors who are investing in these businesses will have to be very sure that they are getting into cyclicality of the businesses, and you are not probably at the bottom of the cycle. You are somewhere probably in the mid of the cycle. So you'll have to be a little more careful when to exit these businesses.
Okay, that's interesting. What about power ancillaries, especially the wires and cables kind of variety? I was just speaking to KEI management, Mr. Gupta, earlier. He was saying that 18% kind of growth visibility exists even from having a very good structural growth last 2 3 years, and export markets are opening up. Polycab and KEI have done very well now. RR Kabel is readying for IPO. Let's see what kind of valuations. But still, this entire part of the power ancillary, do you like it?
Well, Ajay, you are absolutely right. So on the power cable side, the export opportunities are really opening up quite big. In fact, the business that I was talking to you about, that we owned a power equipment business for almost 4 5 years, and now we have booked fully profits out there, is a company called Apar Industries. Now, this company actually, I mean, first a disclaimer that we have fully exited this business. We have booked our profits after 6 years of holding or 5 years of holding. Well, so over here, basically, this business, if you see, has now nearly 50% of the business comes from the export side. And cables is also one very important aspect of their business. And basically, today, 50% of their cable sales also now nearly come from the export side. The opportunity that they see, that they talk about, particularly from the North America market and the Europe market, is because in the Europe markets today, renewables energy is a very big thing. So they need to establish much more new, I would say, transmission capacities evacuating the renewable power. And for the North American market, they're talking about, basically they need to completely rebuild their infrastructure because it's now more than 50 years old. So actually, they had to do it more than 10, 15 years back. But now the infrastructure, what they tell us is that is now really crumbling, and they are really looking at, replacing a lot of these cables. And it's probably something like an annually $20 billion opportunity. So, the opportunity is very, very large. And so, yes, you're right. The cables, in terms of the business outlook, is looking very strong.
All right, Sachin, we'll let you go on that one. Thanks so much.